I am more on the risk management side. Risk management guys are a little bit more averse to going, hey, let's do this, let's take out a bunch of debt and we're going to go ahead and invest. So I was more of a calculated risk. That's what I call it. That's how I invest. The cool thing about W-2 is that you will be able to get the loan that you need because you're already working. I became an agent to really become an investor. However, I realized that there was a niche that I could even help other people find their dream homes or their investment property. So I'm doing a little bit of both now, where I'm an agent as well as an investor.
Samir, welcome in.
Thank you.
Dude, I'm so glad
to be here.
First off, happy birthday. Is today your birthday?
It is.
Oh my gosh, Facebook told me that and I was like, no way, it's the day that you're coming on here.
I know. And you texted me, I was like, all right, I think we can make it work. So
Did you have a busy day?
Yeah, it was busy.
Okay.
Yeah.
Is the rest of your day busy or is it running?
I was winding down, but still, yeah, my wife's got something going on, so I'm excited.
Is it a surprise? Do you know?
Surprise.
Yeah?
Because I was talking to her over the weekend. I was like, hey, did you make any reservations? Should I make any reservations? So she's like, no, we're going somewhere. So she finally told me. But
love that.
I don't know where.
You have to let me know.
I know.
And if it's good.
Yeah. It's exciting.
Well, cool.
Thank you.
We know each other much better now, but kind of through high school.
Yeah.
Then you were in Atlanta after that?
I was in Alabama for most of the time, then went to Atlanta for a few years.
Okay.
And came back.
Worked in banking, then came back and then joined ARC and just kind of walked in. I was like, wait a minute, we know each other.
Yeah.
All right.
Yeah.
But so that's how I know you. But kind of take me back. Where do you come from? How'd you get started? What have you been doing? And then kind of bring me all the way back up to present day.
Yeah. Oh my God. That's a long road to.
I'll try to every now and then, but I want to give people kind of a background of who you are and where you come from.
Right. And I'm thinking today, 35 years ago, right? I'm 35, putting the age out there, but it depends on how much you want to know. But so I moved to United States in 2000, year 2000, moved to Los Angeles, lived with my family. My parents came in, immigrant family, right? Wanting to get an opportunity to come to the United States, better education, better opportunity. So came in, 2003, moved to Alabama and had no idea what I was walking into, except my friends in Los Angeles were like, okay, you just need to know about football. Doesn't matter what, know football, know the game, and you'll be fine.
Yeah. And
I kid you not, I think that was my walk-in to Alabama, and it was the best welcome gift I've ever asked for. So a little bit about football. I am an Alabama fan. I know you're an Auburn fan, but it's all
still
good.
Have you.
Life is still good. So I graduated from high school. That's how we know each other. Went to Hoover and moved to Alabama, got my undergrad in finance and economics and international business. So kind of worked my way through college, went to do a couple of internships. I did an internship with Southwest, did an internship with American Express, which was in Atlanta, and then moved into the banking world for the remainder of my career. So I would spend about 8 years in banking and a couple of years with financial technology startups.
Yeah. So when someone says banking, to me, that's like, I don't know what you do. So kind of break that down a little bit more, because I feel like there's a lot of different roles you could be doing. What was the day-to-day?
Yeah, so day-to-day banking, I was basically part of the risk management team. I was a portfolio manager. So on the easiest way to possible explaining it is I used to review the bank's portfolio to make sure that they were investing correctly, their risk appetite was what they wanted, and I would look at commercial loans, I would look at retail loans, small business loans and things like that, and basically rate them every quarter, see where we are with the bank's investment for the following quarter. So spent about 4 years doing that with Regions, then moved into BBVA, did about the same thing, but I was doing much more smaller, more personal lending stuff. So I was doing more credit card type stuff. I was doing personal loans, small business, and things like that.
Is that so quarter by quarter, especially at Regions, is that like, hey, returns are good, but you're not risky enough, you can take more risk,
right? And
then the bank would be like, okay, let's go get a little crazy.
Yeah. So yeah, exactly. That's the easiest way to put it. Yeah. So we would have a balance sheet. We would say, okay, this is how much we can take risk. And then we would go back and adjust that type of risk. So if we want to take more risk, you have to adjust the models to make sure that we can take that type of risk. So as our job was to evaluate where we are on the measuring scale and then be able to guide the other teams to say, okay, where we need to be able to take more risk or less risk in the next coming quarters and things like that.
The dots, I think, just connected in my head. So on the consumer or realtor side, I see a bank saying, today in an investment loan, you have to put 20% down. But if you, as the risk assessment officer a quarter ago or this quarter says, hey, y'all need to take on more risk, would that change the loan program to where you may come to me and say, I'll fund 90% of it, or I only need 10% down, and that's more risk to the bank?
Right. Yeah, exactly right. So yes, you can probably do it in that way. We still like to have 20% down because obviously they don't want to take the longer risk, but the other variables may change. So we may be loosen on the credit score, or we may be loosen on the debt to income ratio. So we would work with the client to say, okay, still you want to put 20%, but we can be lenient on how much are you putting. So if you're going to put 15%, we're more stricter. If you're putting 10%, that's even more variables.
There's a lot of different levers to pull, I guess, like you said. Man, so is there any, this is a self-serving question, but like, is there a benefit if I work, let's say I work with Regions a ton on the investment, which I haven't really, but let's say I started to, and I got to know 5 different people in that position there. Like, could they tell me like, hey, we're about to take on more risk, so like use us next month? I feel like that would be an advertising thing. That
it's an advertisement thing. I mean, if they're saying that, hey, the way you know is like if they're willing to give you more money or lend you more money,
right?
And your terms get loosened up. So once that happens, your banker's working with you. That means it's coming from the top. So like these are risk guys, the boring guys, right?
Yeah.
We've evaluated the risk on a year-to-year basis, and we know, okay, what makes sense, what doesn't make sense. So when a banker comes in and says, hey, I'm willing to offer you this, this, and this, he's probably packaging that based on what they have, you know, given them the guidelines to work on. So, you know, that's underwriting adjustments. That's, you know, how to basically take a person's and how much their leverage, you know, it could be multiple variables.
Man, that's such a peek behind the curtain. In my head, I guess I've never really thought about it, but I always assumed it was from a Fed level of just, hey, banks, here's what you can offer. So go. I've never seen behind the curtain. So that's really interesting.
Yeah, and I mean, Feds definitely play a big. I mean, it's a very regulation heavy industry, and Fed definitely has a lot of say in what we do and how we do things because it's people's money that you're dealing with, right? So you have fiduciary responsibility of other people's deposits. So because you are lending that deposit, you know, to make a better interest rate or whatnot. So yes, federal does get involved, but there are some rules and regulations and guidelines that the bank creates around the federal guidelines.
Okay, so they give you a box to play in, and you can adjust within. So this morning, I'm getting I'm just bringing this down to where I can get answers. But so I got a quote from I'm looking to get another house, and he gave me a quote, and the monthly the payment was okay because I'm looking at cash flow. It's a rental, but he's quoting me a 20-year amortization schedule, and I was like, man, I want to be at 30. And he goes, our bank's just only going to do 20.
Yeah,
is that one of those levers they would pull of just a risk assessment?
Right. That's a purely just example that you just gave. 20 versus 30, they're willing to take a lesser risk on you because they think it's a rental property.
I'm a risky guy.
Yeah, you maybe or not even risky, but it's like that's their capacity of saying, okay, this is how much we can lend up to this many years.
Well, it's interesting because they funded actually this afternoon in about 2 hours. I'm closing on our Everly.
Oh, nice.
The new construction. Same bank funded it on a 25-year.
Yeah.
And the house that I had him quote this morning is built in the 70s. He goes, well, we gave you a 25 on the new construction because there's less risk.
Correct.
If it's built in the 70s, we're only going to do a 20.
Yeah.
And I don't know. It's full circle. You're kind of telling me this side of it. So that's interesting. So really, they've got the ability to change that based off their assessment. So it's smart for me to probably call another bank and say, how risky do y'all want to be? Can you give me a 30?
Yeah, absolutely.
Is 30 a magic number? Do we ever see anything more than 30?
We've seen them very rare, but yes, I mean, there are amortization above. Like, I think mostly you do 30.
Yeah.
I have not seen anything above 30, but there are some cases where if you're doing a commercial portfolio or something like that, that might be.
I thought I heard of some commercial, like big, like multifamily, like huge, eight-figure purchases.
Yeah.
Like 40 years.
Yeah, and then you can do a 30 plus 10 option. So like that might be an option. So it's like, hey, we're going to give you a 30-year amortization, a 40-year amortization, but that 10-year is an option. So it's like you can take it or not.
Okay.
Yeah. So there's a lot of those areas.
I didn't think we were going to go this direction. I felt like I learned so much. Thank you for that knowledge. All right. So you're in Atlanta. You went
Yep.
BBVA still in Atlanta, or did you come back here for that?
So I was here, yeah. So
Okay.
Regions in BBVA was here after my internships, co-ops I did
Okay.
while I was in school. I finished up, went for a year, and then moved to Motion Industries, so a smaller company that I worked here, and then I ended up staying here working in banking after that transition.
All right. So I want to talk about, because there's a lot of people who are working a W-2 full-time job, great benefits, salary. They want to get into investing, and I think there's like one of two personalities. It's like, burn the boats, I'm going all in, and here we go, figure it out. Or there's I'm going to try to play in both for as long as I can.
Right.
What did you do, and talk me through that decision and the risks and just that whole process?
Yeah. So I think I am more on so I was on the risk management side, right? So coming from a risk management,
risk.
Yeah. So I was managing risk. So risk management guys are a little bit more averse to going, hey, let's do this. Let's take out a bunch of debt and then we're going to go ahead and invest. So I was more of a calculated risk. That's what I call it. Like that's how I invest. So what I do is I think our W-2 income is great, because it's giving you something that you're already working towards, and it's meeting your bills, your whatever you want to do. But then the ultimate goal is to become that investor, or at least in financial 101, we say diversified income resources, right? Like that's what you focus on. So I think if you're on a W-2, I think taking smaller steps, going with one investment at a time, and the cool thing about W-2 is that you will be able to get the loan that you need because you're already working. There is a cash flow. You're much bankable.
Yeah.
The bank will freely give you, because that's going to be your first property. Then you can go to a second property with that W-2, but you can get into, cash out refinance with the first property. So that's how I kind of took the approach, built my career based on that. So I was working all these years, and I was slowly investing, a little bit of it in the real estate. So for me, it was easier to manage the risk that way, and I knew that I had a job that I was enjoying and working. So,
man, I want people to go back and rewind 90 seconds to listen to that again, because people always see the end product of, oh, he's in real estate, he's got all these houses, but they don't realize that no, this started 8-10 years ago of working a W-2 for 8 years straight, or however long, while not going on that trip or not buying that car and putting it towards a house and building that up. And people they ignore that, or they don't recognize it, or they don't appreciate it.
Yeah.
And it's a get rich slow game. That's what real estate is.
Right.
It's not. And so I think that's huge. So go back, listen to the past 90 seconds of what Samir just said, because that's so important. Don't burn the boats. Now it's definitely a strategy, but I think you did it the smart way, and definitely starting early, right? That's huge.
Yeah.
So that's really good.
Yeah.
All right. So why ARC? Why an agent? Why finally quit that W-2? Like what was that kind of last straw to say, all right, I'm comfortable quitting?
Yeah. So, I think at some point you kind of realize in your career that you want to be able to push hard.
Mm-hmm.
And you kind of work those last 10 years to be able to get to what you're going to do for the next 20 years, 30 years of your life, right? So I think for me really I was comfortable enough because I got married. My wife's, also a working spouse. She's got a W-2 and, a strong one. So then she's able to kind of help me work through this process. So I still enjoyed the W-2, and there are structural things that come with it. But then I also needed to take the risk at this point in my life to say, if I go ahead and succeed, it's going to be the greatest thing for me and my family, and to build that wealth. So my transition was, again, calculated, right? I knew that the one household income could support me, and that could be my actual insurance policy if something were to go wrong, and then be able to step away, focus on the real estate side, build the portfolio that I've started when I was 25, 27 years old, and slowly go ahead and see if I can be more successful at that. So that's kind of the journey that I planned on. So again, 2 household incomes. What brought me to ARC was I was already investing. I was actually working with other agents to do this, and I still work with other agents in other markets now. So not in Alabama anymore, but my wife and I sat down over dinner, and we were like, hey, she was like, you can use this as maybe a rep status, a real estate professional status, and you can write off a lot of the W-2s that I'm making to be able to invest in the properties. So I started researching a lot of these concepts and ideas. I listened to the Bigger Pockets that you listen to all the time. And then, I also listened to White Coat Investor. A lot of medical doctors listen to that. So again, I listened to them. I followed their books. I even attended a lot of seminars, and a lot of the medical professionals were doing that. So then that kind of made me comfortable how to do that concept. So I became an agent to really become an investor. And wanting to be able to source my own deals. However, I realized that there was a niche that I could even help other people and find their dream homes or their investment properties. So I'm doing a little bit of both now, where I'm an agent as well as an investor. So
when it's good, I think activity breeds activity. So as you just generate more just regular agent business, naturally more investor business can pop up, and vice versa. We see that a lot. So I'm curious to know. So I haven't met your wife yet. So I'm excited for us to do dinner together so I can meet her.
Yes.
But when you went from W-2, hey, I'm 9 to 5, were you remote or were you in an office?
I was in the office before, mostly, and
before COVID.
Yeah.
So you're leaving in the morning, coming back in the afternoon every day. Versus scheduling now, you're not a lazy person. I know but there's times probably like me that I'm going home to eat lunch, or I'm maybe going to do 2 hours of work from home. What was her mindset shift, if any, of having you there throughout the day, or seeing you, I don't want to say quote unquote not working, but right, you're not at a desk at 9 to 5. Like, did she give you any pushback, or did she joke at all? Like, what are you doing?
Yeah. So, I think that's funny because I think discipline really comes in handy. So when you build your career, wherever you are, W-2 or whatever, your employer expects a certain schedule, what you do and stuff like that. So I really took that blueprint and put it towards my life, right? So when I was having a 9 a.m. meeting, I was having a 9 a.m. meeting when I was maybe doing real estate. It was maybe a different type of 9 a.m. meeting. Maybe I am, planning my day out during that time. So, in my early career, I was able to take the agile training, I was certified for doing a lot of project management type stuff. So I was very good about, okay, how do I need to make my blocks? So she was like, hey, what are you going to do with your day and this and that? So I literally went to her, showed up my Google Calendar, and I was like, look, 9 a.m. to 9:30, this is what's going to happen. 10 a.m. to 11 a.m., this is what I'm going to do. And I literally put it in front of her, like a 6 months blueprint of calendar. And she's like, okay, you're busier than me now.
Yeah.
So I think she felt a little comfortable that she was like, okay, my discipline will kind of carry that, blueprint forward. So yeah, I still do this to this day, because otherwise your day will just be like, okay, you wake up and you don't know what to do.
Yeah.
But when you have an intention, you focus on what your ultimate goal is. I think your spouse will give you a hard time, but if you're able to kind of explain them, hey, this is what my goal is day to day. This is what my goal is year to year. And this is the ultimate goal for our family. I think things kind of get a little bit subtle. So
yeah. Well, and you're waking up being proactive, not reactive, right? I mean, having that plan.
Right.
That's something when I implemented that kind of no white space in the calendar, planning out the week, setting guardrails and timelines around activities, I had more free time.
Yeah.
I found myself not twiddling my thumbs for an hour saying, I feel like I need to be working, but I don't know what I need to be doing, which pushed me into working past 5, 6, 7, late into the night.
Yeah.
That doesn't happen anymore. Right. It's, hey, here's my block schedule. Here's when I'm done, and I'm turning it off.
Yeah.
Right. And if there's an emergency, call 911. Right? Like, you'll get me tomorrow.
Yeah.
I think so few agents and investors do that, because they're just trying to be, fill every single role that's needed. So that's huge. I think you're really good at it.
Yeah.
So.
Thank you. No. Yeah.
I can probably learn a lot from it.
And I think I've learned. I think I've even been our conversations with you, right? Like, off the record and stuff, like I've learned from you that, hey, you've got a set schedule and you have to, like, otherwise, you can really carry on with doing other things and that can distract your day. So, thank you for that. I've learned a lot from you too.
It's so interesting in this industry as an agent. I'm curious to get your opinion on this. There's not a lot of household dependency on am I saying that right? Of the agent. Like,
sure.
The breadwinner is usually not the agent. I don't want to say usually, but majority is not probably in the end. And so I think that mindset or that lack of dependency on that agent kind of bleeds into maybe the culture of the industry, to where, people don't run it like a business.
Yeah.
And I see that a lot, which, you know, if you don't have to, it's not a bad thing.
Yeah.
Some people love it for social hour, and our office does a lot of fun things,
Yep.
which is awesome.
It's great. Yeah.
One day I'll be able to do that, right? But then there's also like I may see them kind of get upset about some changes or some, you know, accountability being held, and it's like, well, this is a business, right? You're running, and so I don't know. It's nice to run in and deal with people and work with people who like, hey, no, this is a business. Professional. Here's 9 to 5. Hey, when we operate, call me tomorrow.
Right.
Which is interesting because that's how the commercial world, right? I mean, you've done some commercial deals.
Yeah.
That's how it is.
Yeah.
It's just black and white.
And they will not pick up your phone after 5
No.
on Friday night. So
No, not a chance.
and you're not doing any business on the weekend.
No.
Like, so I think that's an important, like, learning from those guys and bringing that same thing. And banking was the same thing. Like, banking, we are even more like
Friday at 1 o'clock.
yeah, like that file is moving to the next Monday, right? So like, I think I learned a lot from that angle. You got to keep your business hours. I mean, I do a lot longer hours now, but you know, as an entrepreneur,
Yeah, that's awesome. Well, what's your focus now let's just look at the investing side. Is there a type of investing, an industry, a niche? Like what does it look like for you today?
Yeah. So, you know, I started off, you know, single family homes, you know, kind of started working with lots of investors, kind of helping them still grow their business, their investment properties and things like that. My focus has been primarily, I am looking at going into more commercial space, especially in the medical leasing office space. So my focus will be, I want to create a brand or a company that can just focus on medical, you know, facilities, being able to create medical, you know, plaques or any type of opportunity that will have an area where one person can come in and have all their opportunities. So they don't have to go, it's kind of like a mini hospital, right? So if you go into a Grandview, you're going to do all of your things there. But when you can come to a, you know,
We're like an outpatient.
Correct. It's like an outpatient deal. So, and I will not be running the business side of it, but it'll be more focused on the real estate side. So I like, that's going to be my next 2024 focus.
That's all.
That's going to be.
So is that buying or building a building that you can create that atmosphere?
Yeah, building and also leasing. So leasing and releasing to these medical professionals, and then also buying some of those. So that's the asset class that I've been looking to focus on. Yeah.
And then still continuing with the sales side, right?
Yes.
That naturally just falls into place.
Yeah. The sales side, I think at first I was like, I don't know if this real estate's for me, but you know, I think people really enjoy working with people, and you know, I think they like the relationship that I've built with them. So you know, I'm going to continue that.
Yeah.
Yeah.
Well, and you've talked to me about your community a handful of times. Like you've got a unique sphere that a lot of people just don't have that connection or that, I guess, relationship with. Yeah. And so being able to tap into that is, I mean, you walked into the industry already 3 legs up from a lot of people who start, right? I mean, I think you do just because you have those relationships. Yeah. So I think that's great. I mean, you're going to kill it. So looking into next year, so 2024, you're excited about getting into the investment, the commercial space, medical focus. 2023, what are some big moves that you made that you were just like, yeah, man, this year was awesome because of this?
Yeah, you know, so I think staying focused, I think that was the biggest thing, because I got into the real estate in 2022. End of 2022, I was still working W-2, and I was transitioning off. You know, I was planning for my exams and all that. So I came in during the downturn of the market. So, and this year has been amazing for me. Like, you know, it may be different for other people, but, you know, I think I've been fortunate that I've been able to work with the people to be able to do the sales I needed to do, or, you know, so this year has been a lot of learnings. I give a shout out to ARG. They've been really great with getting me ready to what I wanted to do. But my year wants to look better every year, right? Yeah. So that's how we focus on. So, you know, 2023 was a lot of goal setting, and I wanted to reach those goals, and, you know, luckily I was able to. So really focus and discipline. So once you have those 2 down, then you can kind of, now my next focus is how to be in a niche market. Focus on.
Good. Have you done your planning and built your roadmap for next year yet, or is that something you'll do?
I'm working on it. Yeah. I do it for the last 3 weeks of December. I try to focus on that.
That's good. I'm excited. Well, I want to have you back on maybe middle or towards the end of next year, and just kind of catch up on progress and where you're at, because there's no doubt that you're gonna going to kill it.
Yeah, absolutely.
Do you have, well, I guess I won't ask you your goals yet. So
Yeah.
I was going to talk about more on the real estate side.
Yeah.
Do you have like transactions, or do you have a goal in mind on that? Or are you going to let that come more now?
I know I do. I have
Yeah.
a goal. Yeah. Like, cause I think, so, my first year in real estate, I was like, if I could do 12 deals, any deals, does not matter, and then I put a dollar amount to it too. Cause I like to see what those goals are going to be comparable to my 12 deals need to make X, right? So like I'm very numbers oriented if it comes to that. I think you're kind of like that too. So yeah, so 12 deals, I was able to do 12 this year.
It's huge,
2023.
which is huge.
Yeah, thank you. Yeah, so first year, so I think it was exciting. So my next year, I like to, increment maybe 10% more.
Mhm.
So,
Did you say 10x?
and yeah, well, not 10.
120 deals?
No. I think I would like to double it. I would probably 24 deals.
Yeah, dude, no doubt. Yeah, I mean, I think you're going to blow that out for sure.
So that's my number, and then I've got a dollar amount that's,
associated with
that 24.
Yeah, I love it. Very cool. Book recommendations. You got anything you're reading right now you've read this year that you love that we need to talk about?
Oh man, yeah, I've been reading quite a bit, but the one that I really like is Good to Great by Jim Collins. It's one of my favorites. It's my second time reading it, and I recommend people definitely pick it up.
Do you tend to revisit a lot of books, or you just kind of
Yeah, so I have like a few that I like. Rich Dad Poor Dad.
Yeah.
That's my January book. That's my January to January book. So I read it in 1 month.
Yeah.
But every year I pick that up. 7 Effective Habits of
Stephen Covey.
Yeah, Stephen Covey. Very good book. Yeah. So that's another, rerun.
Yeah.
In my portfolio. But I try to read new books if I can.
That's good. Well, cool. Before we get out of here, how can people find out more about you? Socials, website, anything?
Yeah. I mean, you can follow me, Instagram, Facebook, all the, I think realtors, we're pretty much everywhere. So you can, I mean, it's not hard to find us. You can check out my websites, Ratani.com. I've got all my portfolios and stuff. And then I'm launching that new website. It's probably going to be January with the medical side.
Yeah.
So that'll be later, so I cannot disclose.
Right. Yeah. That's exciting. Before we wrap up, one thing I want to talk about. Earlier this year, you were telling me about you were creating basically an investment fund with just your buddies who wanted to get into it. And I was like, dude, my ears perked up because I was like, man, I want to do that, but I don't know how to get into it or how to start it. So walk me through, how did that start? What does it look like? Tell me about it.
Yeah. So, I kind of lean back. Again, I've been really fortunate that I'm part of this community that, has a sphere of its own. And just being able to talk to those people, kind of what their needs are and things like that. They have done really well. There are a lot of business people in there. They're looking to do new things with their capital and with their resources that they have. So, since I've been connected with them, I would hear, hey, can we invest in this? Can we invest in this? And really, they don't have the time to do it for themselves, right? Because they've got other things, bigger things, better things going on. So that kind of gave me the idea of like, hey, why not I use the resources that I've got in the community and then be able to bring a value add for them and make their capital to work and, be able to bring syndication deals when we have an opportunity to do something, new. So I think I'm going to tie in the syndication with the medical facilities that we're going to be purchasing next year or so. But yeah, so that's really where I come in. So I like to not just raise money for raising money because money can be really delicate, and as we know.
Yeah.
So you don't want to just be, hey, give me all your money and then we'll figure out what we're going to do. No, there's a plan in place. There's a discipline in place. So we know exactly what we're going to go into and how we're going to exit. And then we raise the fund based on that. So, we're working on hopefully a fund for next year.
Okay. So you never collected any money until you had
I've done a smaller, So I've done a smaller fund that we bought a few residential properties with.
Okay.
So that was my test. Again, calculated risk, right? I'm not going to be like, hey, there's a $3 million deal. Let's go ahead and invest in it.
Right.
I'm going to do the 200, 300, maybe 500 to make sure that it works, make sure that I can manage their money because that's a fiduciary responsibility for me.
Right.
So I was able to be successful with my friends. So now we're going to open it up a little bit more. And again, that will be still, it's not just, hey, anybody and everybody. We're very selective,
Yeah.
who we're going to be.
Yeah, you got to fit the mold, right? Because there's an expectation of I've gotten the opportunity to raise a couple times for some deals, and it's like I don't want everyone with money just in the deal, right? It's like you can't call me every single day asking for we'll provide updates, but I don't know, that's really cool.
I think there's a big trust. I think the trust factor is huge.
Yeah, and completely.
Yeah.
So, very cool. Thank you for sharing. I know that's huge, and a lot more to come next year. So I'm interested to hear an update on that. Anything else you want to run through before we get out of here?
No, I just want to say thankful to you.
Yeah.
I think since the day one, you've been really supportive, and I've enjoyed just kind of getting to know you more and more. I know we were in high school. That's a different person,
right?
Back in the day, but I think I just want to give you a big thanks and big shout out for doing this. I think you kind of bring a different type of experience into the market, and we look forward to we look up to you, as well as look forward to seeing what you're doing. So thank you for having me.
I appreciate it. All I ask is don't forget about small guys when you just take off, because it's gonna be cool to see 5-10 years from now. Awesome. Cool. Thanks for being here.
Absolutely. Thank you for having me.